This is Igor from FX Igor YouTube channel, and today we'll talk about supply and demand zones trading. But before I start and talk about this topic, I just want to tell you, if you want to see automatic supply and demand zones on your MetaTrader chart, you should have a special indicator. You can download the free indicator on the link just below this video. So let me start to analyze charts and talk about supply and demand zones. Right now you can see British pound dollar chart. As you can see with the blue line, we managed and draw support area as a supply, and resistance area, demand area with the red color. So first, let me talk about a little bit about theory and about all these zones and why they're important. As you know, when you find the lowest low, you can put support, and if you find highest high level, you can create resistance level. But where is the catch? The catch is that if you want to have a strong support or strong resistance or strong demand or supply area, you need to have a confirmation. What is the confirmation? I will just give you one example. What is the confirmation? So right now I'm watching, maybe this is the better thing to show right now. You can see, for example, very often, just to find some pretty way. Okay, this can be very pretty. This is very pretty. Yes, this can be very pretty right now. If you see that there is a line that can connect several highest high or lowest low levels, and you have not one, not two, you have a 3, 4, 5, 6 dots that you can connect with one line. It's a confirmation that you just found on the chart strong support or strong resistance level. And the more the dots, for example, that you can connect, it's a proof that kind of levels are stronger. But there is another rule here. If you have a higher time frame, for example, daily chart or weekly chart, for example, this resistance level here, or this zone with red line, we can call this very strong resistance for British pound on weekly basis. Why? Because this is the highest high area in last 2 years, and if price in future just breaks, so price breaks this resistance area, we can be sure that that bullish trend will be extremely strong, and there is a higher probability, much higher than 50%, that price will go above and much more in extension. So what we want to do is we can trade always two scenarios. We can trade, for example, when price touch resistance area. We can go and create scenario that price will go downside to the support, or we can wait that price breaks all this area and then create new trade, and for example in this case bullish, or if price goes below this blue area, we can sell. So there are always two scenarios, and you should pick one of them. For me, the best opportunities are when you have a strong bullish trend, then you have resistance, and then you see breakout and price just goes above that resistance. It's a strong signal very often, and the best results are there because in next 1-2 days, maybe several days, you have more bullish trend. I can say that in probability more than 55-60%, and it can be very interesting and profitable trade. So the main concept here is you need to pick the scenario, the best scenario, when you just break this range, and in that case you can create a profitable trades. This is the first thing that I just want to show you. The next thing about theory. For example, right now we're watching British pound dollar. You see, for example, price goes down, then up, then down, then up, etc., etc. For example, right now here we can create, Fibonacci retracement here, and what we can see that price likes to oscillate around some levels. Look, this is the Fibonacci, this is the supply demand zones. all these areas are very important areas for our currency pair or any kind of asset. For example, this is the 23.6 Fibonacci level. Can you see how price oscillate more above this line than others? If you just compare, you will see that price oscillates about important levels. You will see, for example, if you take tests, for example, that price like to oscillate in the pivot point area more than other areas. It's very simple to create machine learning method to do classification. Zero if is in that box in pivot area, outside the box 0, for example, create the model. You will see, for example, model where the 60% or 59% or sometimes more, sometimes less. You will see there is a statistical evidence that price oscillates more around important price levels. And this thing we need to use as information to be better traders. So technical analysis, supply-demand zones, Fibonacci levels, pivot point areas, all this stuff in technical analysis that help us to determine entry levels, stop loss, targets, important price levels. So the best strategy is always try to enter into trade on some important area, try to put stop loss in some important area, try to put your target in some important area, and this supply and demand zones help in this. So this is not exact science, so I can tell you this is the high probability area. No, it's not high probability, it's a few percents above 50%, but it's enough. It's not 50-50. It's, for example, 55-60% more chance that price will be or oscillate in that area. And this knowledge can help you to improve your results as a trader. You know, if I have a system, for example, that is a 55% winning ratio when I risk $1 and try to achieve $1, I will be rich very, very soon, because these kind of strategies, you have an edge, you have advantage. It's excellent. People always have high expectation. They think if I need to have 80%, 90% or something. No. It's impossible. It's impossible. It will be always just above 50%, and it will be enough to have maybe 50% on the end of the year as annual profit. So the very important thing is expectation. You should not expect a lot in trading. Now, I just want to share you a little bit the charts right now. Sometimes you will see that supply and demand zones are very, very stretch, some wide area. And for example, just now in 4-hour chart, we can see that. It's a classic type of the range trading. If you're a trend trader, you want some push and bullish and bearish trend, avoid this kind of charts. For example, I will not trade Euro Japanese yen using 4-hour chart right now. So in this moment, for example, I will go to the daily chart and I will see, wow, we have some kind of a bullish trend. Right now we're in resistance area. We have another resistance, as you can see just above, and we need really, really strong push about 149 price to enter again into bullish trend. So right now I will never go bull. I will wait either to see strong push above, either to wait to see some major pullback or something else. So this is the interesting stuff. For example, here we can see similar result in euro dollar, and right now we are in range, but this range is huge. It's not small. Look this. You have a up, down, up. Now we can see down or maybe breakout. So what my strategy can be, I can put a pending order. If price is above 1.01, I will enter into bullish trade. Otherwise, I will wait to see what will price do. Maybe I can go sell this trade and put a tight stop loss. So these supply and demand zones help me a lot. In the title of this YouTube video, I'm talking about order flow trading. It's just a strategy. When you watch other people or your trades from the past and try to analyze them like a general after battle. And this approach is very good in trading because you can watch patterns, you can watch oscillators, you can watch, for example, all kind of stuff, volume and everything, and just to learn and analyze market in one beautiful way. And this can improve your trading strategy and improve yourself as a trader. Now I can show you, for example, British pound, Japanese yen trade where we have the market. So I am just talking about pure technical analysis. I'm not talking about fundamental analysis. When I trade for real live trades, I always count current situation and forex market and fundamental analysis. For example, right now I know that British pound increased the interest rate. It's 3% from just a few days ago. That means the British pound will be stronger because of fundamental analysis. And then I always look to find some kind of maybe bullish trades in theory. Of course, on the other side we have a recession, problem in industrial production, problem in various industries, etc. And because of that, I'm flat. I don't want to mess up with British pound because it's unclear situation. In theory, it should be rise. On the field, we see the problem in all segments and recession, and it's real unclear. And I do not want to have anything right now with this, with pairs correlated with British pound. About Aussie dollar, for example, Aussie dollar is a strong bearish trend last year, I can tell, and we have a very high resistance right now. We are very close to the support, and because of that, we just need to be just little bit caution here. And for example, here I want to avoid trading, and I don't want to enter any kind of trades because it's still unclear. You can see we are some kind of medium resistance right now. The next resistance is here, but if I see the push right now, I can put the new target about 0.672, and that can be interesting trade, but very short time trade if you watch 4-hour chart. The gold has some kind of bullish trend last few days. It can be interesting. It's right now to some kind of resistance area, but if we see the push here, it may be very interesting, and maybe price went above 1,900 and above that, and just I can monitor and use these areas for stop loss and targets. The supply demand zones you can apply to forex industry, but you can apply in stocks too. For example, you will have fewer lines like this. This is the Amazon stock. Right now we are on support. This is the resistance. But in stock market, when whole market is down, recession is close, the best opportunity is to wait. The price goes above support area, and then wait, and then make a bearish trade, sell trade, because the recovery of whole S&P 500 index and whole US market, I think, will be very slow. Maybe we'll wait a couple years, etc. The same thing is for example, Disney or other stocks. As you can see, we are very close to the support level, and we cannot predict the future. And for me, for example, for stock market in the next 2 years, I'm bearish, and I will wait for some maybe pullback or something else to enter into trade. However, in this video, I just want to show you how you can use this supply and demand zones to put a stop loss and to put a target for your trades. And I hope that you can use this very caution and to use that as a regular trading. If you want to have this kind of indicator, just go below this YouTube video and download and install on your MetaTrader. I wish you a great day, and bye bye.